Yo, what's good, y'all? Welcome back to the channel. It's your boy Keno Brown, and it's another great day to be great. Listen, I got what you want. I got what you need. You guys been asking for it for how long? I don't know. You always ask for it every weekend. Keno, please, I need it. I need it. You know I got you, bro. I gotta keep y'all game, man. Except what? Why? Love y'all. No cap. So, without further ado, we're going to start another back testing session. Let's go. Come on, round of applause for your boy, man. Give me y'all a free game every week on the dot like a clockwork, man. Let's get right into the video. Okay, let's get right into the breakdown. We're going to start from January 27th. So, we're going to do the 27th, 28th, 30th, and 31st. I did not trade on the 29th because it was FOMC meeting minutes. So we're just going to back test from those 4 days. So let's get right into it from January 27th. Let's start on the 1 hour charts. As you know, if you don't know, this is the time frame I always start from first. I don't start from any other time frame. So on this time frame, on the 1 hour time frame, what do I look for on the 1 hour time frame? I like to identify structure. Structure looks like this. Boom, 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 boom. That's what uptrending structure look like. And this is what downtrending structure look like. Let me see. Make this red. We're going to make this downtrending structure red. And we're going to make the uptrending structure probably brighter green. It's too dark. Yeah, let's just do it like that. So, as you can see, in an uptrend, what do we have? In an uptrend, we have higher highs, and higher lows. In the downtrend, we have lower highs and lower lows. So this is what a downtrending structure consists of. Lower highs and lower lows. Higher highs and higher lows consist of an uptrending structure. So when price is going up, it creates a high, then it creates a lower high, a higher low, lower high, lower high. So price goes up, creates a high, creates a lower high, then creates a higher high, then it creates a new lower high. Come on. Creates a new lower high, then it creates a new higher high, then it creates a new lower high. In the downtrending structure, it creates a new lower high first. Well, it creates a lower low first. It creates a low, then it creates a lower high, then it creates a lower low, then it creates a new lower high, then it creates a new lower low, then it creates a new lower high. The more price goes down. Is it? I think it's the backwards. My fault, y'all. My definitely higher low. My fault. So higher highs, higher lows, uptrend. Lower highs, lower lows, downtrend. So I just made a mistake, honest mistake. But higher highs, higher lows, uptrend. Lower highs, lower lows, downtrend. That's what I'm trying to identify when I'm identifying structure on the 1 hour time frame. I'm trying to identify higher highs or higher lows, lower highs or lower lows. So just try to think about it like this. Higher means up, lower means down. Higher highs, uptrend. Higher lows, uptrend. Lower highs, downtrend. Lower lows, downtrend. So if you can look at the charts, it looks like this. Structure, right? From the low, we have a structure. Boom, we created a high. We created a low. Is this not perfect? High, created a low. High, created a low right here. High, created a low right here. High. You feel me? This is how the charts move. This is how markets move. It moves in structural patterns. So what structure did I see coming into the 27th, which is the Monday, just past Monday? What structure did I see? So I'm going to start from down here. We had this low and we created a high. Then we created a new higher low. Then we created a new higher high. Just like that. This is what I seen coming into the markets on Monday. So I like to draw my areas of interest according to structure. So I'm going to draw this area of interest right here. Boom. We had the structure highs up here. Boom. We had a structure high right here. Boom. And where else did I see another pattern or structure? Right here. Boom. I seen it right here. Boom. This is really it right here. Boom. So I'm going to draw a structure again just so you can see how it looks like. So boom. If we start structure from down here, right? We had this low, created a high, created a low, created a high, created a new low, created a new 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 high all the way up here. Then we had low, high, low, high, low, high. So this is just me following structure. So when I created these areas of interest, it's just me following structure. As you could see, every time price came up here, you could see, boom, price came down here, boom, price came up here, boom, price came down here, boom. What happened when price came back down here? Boom, went back up, boom, went back down, boom, went back up, boom, down, structure, boom, structure. So it's only at these particular interest points, areas of interest, or these circles where I'm drawing right now, is where I'm paying attention to price. As you can see, to the left, you can see when price came here, it dropped, and it pushed higher, created a new high, and came back. When it came back here, it pushed up again. When it came back into the highs, dropped again. It came back into the lows, pushed up again. It's just like structure, support and resistance, supply and demand. They're all pretty much the same thing. It's just me trying to break down essentially how I identify my areas of interest and identify my areas of interest according to structure. I like to mark off just the wicks of structure, because in the wicks, it shows you who's winning in the wicks. When you see price, like a candle that looks like something like this to the left. Let's go here to the left. A candle that looks like this, and you have a wick at the top like this. You might not be able to see it. You have a wick at the top like this. The sellers are in control at this wick. You know for sure. Why? Because the body closed right here. The sellers took price down here. And then when price came back here, who was still here? The sellers. When you look left, the sellers were still here. So when price came back down there, back up here, price dropped again. And then who's down here at this wick? You can see the wick shows you how much buyers momentum was in this candle. You feel me? The buyers were up down here. So once price got here, boom, buyers stepped in strong, heavily, pushed price all the way up until its new highs. Now you just got to look to the left. You can see now price came back down here, where the buyers started taking over this area of interest, where the sellers were winning at one point. They took a loss to the buyers at this point. So they were winning here, but buyers stepped in and took over and pushed price up. Once they push price up, this area of interest no longer belongs to the sellers. It belongs to the buyers. That's why you see when price came back back here, guess what it did? It bought up, right? It's just areas of interest where buyers and sellers come to meet at, and then usually when they come back at that same area of interest, they're going to have that fight again. who wins is undecided. You have to go drop down to the lower time frame to really decide who's the winning player at that point. But that's essentially what it is at that those areas of interest. So now that I drew that, now that I explained all the concepts, hopefully we have a full understanding of how I identify my areas of interest, how I draw up these boxes, how I, classify higher highs, higher lows, lower highs, lower lows. So higher highs, higher lows, uptrend, lower highs, lower lows, downtrend. So this is how I'm classifying these areas. This is how I'm marking them off, marking off structure, all that stuff. You can see I missed a couple structure points like right here. I could draw this out, but this is essentially how the markets look like when I came into the on Monday. When I stepped around the charts on Monday, this is essentially how it looked like. And now I do the same thing, drop down to the 15-minute time frame. After the 1 hour time frame, I drop down to the 15-minute time frame to do the same type of analysis where I'm identifying structure and drawing my areas of interest. So boom. I drew this much area of interest just because I'm trying to show you guys something, but usually I don't. I probably draw like 2 above price, 2 below price. I don't like to have my charts messy. I don't like to have too much stuff going on my charts. So this day on a Monday, I don't see anything on the 15-minute time frame that I would like to wait. Hold on. I do. See this little area right here? We're going to make this orange so we can have a separation on the colors on the area of interest. But you can see, I'm going to show you where the structure lies. The structure is right here. You had the low, create a high, create a low, create a high, create a low, create a high. You feel me? That's structure right there. So this, where it created a low, you can see when it came down here, who was here? Buyers was here, right? They pushed price up. Sellers stepped in back in the 1 hour area of interest. They brought price back down. But guess who was here again? The buyers. Buyers pushed price even higher. Now they're back into the area of interest where sellers won the last 2 times, or they're winning currently. Let's see who's winning the fight. Who's going to win the fight? Now I drop down to the 1 minute time frame to find out who's going to win the fight. And how do I bet on them? I like to see confluence between the area of interest and my entry pattern. So I'm going to fast forward to 9:30 to show you my entry pattern. I do not enter into a trade before 9:30. I must and always will wait after 9:30 to get into a trade. I will always wait till after 9:30. I didn't used to before, but it was according to like how I trade now. And doing my back testing sessions and learning from my trials and tribulations and mistakes in the market, I got to the point where I'm at now. So boom, look at 9:30. There's a big bullish candle. Boom, price shot up crazily, right? I'm seeing price look like this. With a big bullish engulfing candle like this, I shouldn't be looking for sells. I'm going to be honest. The idea shouldn't be sells. I don't think so. But I did see a sell opportunity. Why? Because I could see price starting to wick in this area of interest. You could see this big bullish engulfing candle followed behind this weak candle, which is still bullish, but is weak. It left a little wick there. So how am I trying to get into this trade? I'm trying to get into the trade if the next candle closes below this weak candle's body, the body of the candle, come back and retest it. I'm taking it down. I'm trying to get into sales to go back down. Simple, nothing too complicated. So boom, the next candle, what it did, closed below. So I'm waiting for the retest. So let me draw up my my trade idea. This is the exact trade idea I took to try to catch these sells, but it didn't work out. I got stopped out in seconds, bro. Tragic. It happens. But as you can see, this candle was pretty bullish. I don't know what I was thinking. I really don't know what I was thinking. Maybe I was just hype, but took a fat L on this one. which is cool because I'm looking for the next area of interest to take a play from. So we fast forward the clips, and then I could see from down here, so the buyers took over from this area of interest. Remember, the sellers possibly here the last time. If you look left, the sellers were here. The buyers took it up. Boom. The sellers won. They won the fight. They brought it back down here. Right. So I'm thinking next time when price gets back to the same area where the sellers took over, the sellers are going to take it back down here. But that's not what happened. Right. So now that the buyers took over, I'm expecting to use this area of interest, the same area of interest that the sellers once had, to use it as a springboard to go back up top. So now we just waiting. We see it waiting to see if that area of interest get tapped in for the buys. Does he get tapped in? I don't remember. I don't even remember what trade I took. I think I was one and done. 1023. Yeah, I think I was one and done on this day. Oh, so you could see up top when price came up here, this could have been another area of interest that you could take a sell from. Did I take a sell from it? No. I'm going to show you my journal to show you I didn't take a sell from it, but a trade that would look like this. Boom, it would retap me in. Let's see if stop loss would have been hit. Yep, stop loss would have been hit. So I stayed away from this one, but this original trade right here, where I did try to catch sells, I was fighting the trend massively, especially after seeing a big bullish engulfing candle like that. I don't know what I was doing. I don't know what I was thinking, but we'll see. We'll see the journal right now to see if that's the exact trade I took. And it is. That's the exact trade that, well, it went a little deeper. So the first trade I took, yes, it was right here. So let me show you. I took two trades that day. First trade I took was this right here. The same trade that you see. Boom, bullish engulfing candle. After this bearish close, boom, we try to take it back short. Did not work. Stopped me out in seconds. And then I think I caught another trade up top here. Let's see. I don't know what this trade was about. I don't even know why I took it. Honestly, it was a bad setup. I'm going to be honest. Bad setup. I guess I was trying to make some money back. I can be honest. I could be honest. I don't, it doesn't hurt me to be honest with you guys. It really doesn't. So yeah, bad setup. Anyway, let's fast forward to the next day. This day was an L day. It is what it is. I think I lost I don't remember how much I lost. In my journal, Tradezilla, listen, I got real beef with y'all. I paid too much money for y'all's platform to be having too much issues with you guys, for real. So let's fast forward just a little bit. 3. Let's go to the next day. 4, 5. So this is what the next day of the markets look like. So right now I'm just gonna get rid of all the drawings. I got a lot of stuff going on. I did a lot of drawing out for you guys, as I told you, so I can better show you guys the picture of what the markets look like. So from this low, we have the low, we have the high, we have the low, and then we created a new high. This is structure to me. This is all I can see right now in the 1 hour time frame. So boom, draw this out. This is the 1 hour time frame. Boom, draw this out. Boom. And then I could see structure from here being respected. That could be respected. It's almost in the same area of interest. I'm not gonna lie, it's almost in the same area. But this is all I seen for right now. Any other price to the left, I have to go deep left to see, and I might have to go do that right now. Yep, deep left to go see it, which would be something like this, this high. That's probably where I marked out. Yep, I did mark that area out. So we're just gonna purple box it, so we at least have that area of interest that we can say we marked out from all the way deep left from price, because price went crazy. So this is all the areas of interest that I see on the 1 hour time frame that I think are important. I don't see anything else that I think is important on the 1 hour time frame. So from here I drop down to the 15-minute time frame. so we get another analysis of what's going on. I would say on the 15-minute time frame, I really didn't see much. I didn't. Yeah. I can see from these lows, we had a lot of structure going up back into price. But as far as like areas that I probably want to draw off, I don't see anything much. Not in this price action today. Not really. So we drop down to the 1 minute time frame. What are we waiting for on the 1 minute time frame? Waiting for one of these areas of interest to get tapped in at 9:30. Hold on. Price pushed up. I can see sellers here. You know what? I'm gonna draw it out on the 15-minute time frame. I'm gonna draw that area of interest out because it's possibly an area of interest that I used that day. I didn't actually check my journal, so when we do check it, we'll fact check myself to see if that's exactly what I used, because I don't actually know. We had these lows and price came and created a new low. Anyway, let's keep going forward. So let's fast forward it to about 9:30. Just 2 clicks, 1, 2. It's about 9:30. So this is the 9:29 candle. Let's make that a little bigger. This is the 9:29 candle right before the 9:30 candle. Boom, 9:30 candle. Ew, look at that. That's so disgusting. We had a wick basically 9:30. The buyers and the sellers had no control of price during the open. So we're waiting to see who takes over. We can see the buyers are trying to push price back up, but they're pushing it up into an area of interest where the sellers were winning the last time. So what am I waiting for? I'm waiting for the break of the candle. Let's see. That's not the break. Yeah, something like this. So I would take this trade right here. Stop loss above the wicks. Entry below the body. Take it like this. What am I waiting for? I'm waiting for the retest. Take it back down. Simple. Let's see if we get a retest. Got the retest. Let's see if TP1 gets hit. Stop loss got hit. I remember this trade too. I got slapped up. So tragic, bro. Did I even take this trade? Let me see. It's tough. Yeah, I did take 2 losses this week. Yeah, I did take this trade. LOL. I did take this trade. You can see right here, I took the trade that came close below. Stop loss hit in like 3 minutes. And then I re-entered on the same setup. Yeah, I re-entered on the same setup, which was up here. So I took an L on this one, fast L on this one. And then I re-entered for the same trade idea because it was still in the area of interest that I was paying attention to. Waiting for the retest of this candle. Boom. Boom. We got the retest. TP1, TP2 hit in like 1 minute. So I did walk away with a little bit of money on this day. It was like a break-even day though, because I only made like $50, bro. TP2 was hitting like 1 minute, but TP3 also hitting like 2 minutes, bro. If I could have... No, TP3 was hitting like 3 minutes. Yeah, there we go. Like if I could have, I tried to move my take profit down a little bit so I can catch more of the move. It happened so fast. I can't lie to y'all. It happened so fast. But the new thing I came up with is that when price, if I have a stop loss of less than 30 points, I'm gonna go for TP3. I'm going to maximize my gains out of a trade. If I have a stop loss smaller than 30 points, I'm going for TP3. Anything above a 30-point stop loss, we're going for TP2. We're not going to be greedy. So yeah, this trade, I think I did walk away with a break. It was break even. I'm not going to lie, break even. Because the first trade, the first stop loss on the first trade, I remember it was about like 36 points or something like that. This is my entry. My stop loss here, yeah, 35 points, 36 points. So I was risking 1 contract on both of them. So the 1 contract on 35 points is weighted more than 1 contract with 25 points. So at the end of it, I was only up a little bit of money. So I considered it a break-even day, although I didn't technically have a break-even. It was a win. Win is a win though. So we're gonna fast forward past Wednesday because Wednesday was FOMC meeting minutes, and I took that day off. Why? Because I just know my strategy just doesn't work well on FOMC meeting minutes days. Like, I just know that. Why would I trade when I know my edge doesn't work well? Why would I do that to myself? There's no point in doing that to yourself if you have a proven track record to show you that your edge does not work well on a particular day or a particular news event or particular day or a news event. Why would you trade on that day? You're most likely not going to make any money. So why would you trade? I just took the day off. I went to go do other stuff. Things that had to be done that I didn't get done during the week. So, same thing as usual. 1 hour time frame. Identify structure. Boom, structure. Boom, structure. Boom, structure. Boom, structure. Yeah, create a high, create a low, and then create a high. So we had structure. This is all of structure, but you can see right here, this is consolidation. Why? I'm going to draw it out for you right now. We entered into a little bit of consolidation. So I'm going to draw the structure high. This is what the high look like. I'll draw this structure low. This is what the low look like. And this was where price started to just, do nonsense. And it was basically doing nonsense between the up and downs of going up, going down, going up, going down. So this is consolidation, right? Consolidation markets is tough to trade in because it's not giving you a clear direction of where you want to possibly take a trade in, but that's why you drop down to the 15-minute to try to identify any areas of interest, and there is not any area of interest that I like to see on the 15-minute. So I dropped down to the 1 minute, and I got to wait for my entry after 9:30. So let's fast forward to 9:30, just a smidge. So we see 9:30. This is the 9:29 candle. Let's fast forward one more to the 9:30 candle. What did 9:30 candle do? Pushed up, higher. Oh yeah, I remember this day. I did actually have an area of interest. I did actually. I think it was this big wick that we see right here. I think that was my area of interest. Yeah. On the 15-minute time frame. And I missed the trade. The trade just left me, bro. I was so pissed. The trade just left me, bro. Yes, I remember. 15-minute time frame, and I had another area of interest right here. This area of interest right here was weak. It's a weak. I don't know why I drew it. I think I was just trying to catch a trade because I missed the trade. And I just have to be honest. Like, sometimes we still have FOMO even though we're trying to follow our rules. Like, FOMO happens to everybody. Like, yeah. I wanted to get into this trade right here. Right? When price came back down and it closed above, I wanted to wait for the retest for price to come back here and tap me in. It didn't. It came so close to tapping me in. It came like 2 points away from tapping me in, and then it went straight to TP2. Look at that. Oh my God. Straight to TP2. It's tragic. This is what. So when I missed that trade, I'm like, oh my God. That's pretty much my day right there. I forced it to find another area of interest. It's just the area of interest right here. I decided, you know what? Since it's already pushing like this, I'm going to wait for price to get back down here and then take it back up to the next area of interest, since it looks bullish already, right? Since that's where momentum I could see is starting to head. So I waited. Boom. Price came back into that area of interest. Now I'm looking for longs from here. Price dipped down a little bit, dipped down into the other area of interest. I think I took a setup that looks like I wanted to see something like this happen so I could take it from this area of interest to the next one. So price stops me out, which is pretty tragic. And I waited pretty long. No, you know what happened? Oh, yes, I remember what happened. Price never stopped me up. I left early because I was in this trade for at least 30 minutes. And Price made structure into my direction. So you could see we got tapped in. Price made a high, made a low, made a high, came back, made a low. Right here, made a new high. So you can see price is trending in my direction. So at this point, when price got back up here, I put my stop loss under here. Because I'm like, if it goes back under here, the probability of it stopping me out, it's pretty high. Because what I trade is break of structure. That's what I trade. So if price comes and breaks the structure of the trend that I'm trying to go in, most likely it's going to fail. Most likely I'm going to lose this trade. And I'm okay with that. So I moved my stop loss here, and I think I took like $120 loss, which is okay. I didn't have to take a loss at all. I could have at least got a break even, because you can see TP1 is hit, and then it hit my break even. So I could have had a break even day if I had more patience. I put that in my journal to have more patience, and trust me, I'm working on my patience. I'm working on my patience. So you can see I lost 195 that day. As you can see, right here, same trade idea. I took it at the break of the structure. Structure was creating in my direction. I put my stop loss under here. I got stopped out on this candle. TP1 was hit eventually. Sucks. I said it to myself. Gotta work on patience. You know, risk, whatever. I forgot where I saw talk to myself, but you know, we just gotta work on patience. Patience is definitely tough. Patience is hard to have, especially if it's just not your personality. But you know, you just have to learn. You gotta keep growing. You gotta keep elevating. You can't just say, oh, I'm usually not patient, so I'm just gonna be impatient for the rest of my life. No, you gotta learn. You gotta grow. You gotta get better. You can't just blame your past and stay in that position. So as I said, I'm working on it. Let's fast forward to Friday, the last day of the week, which is where I caught a banger trade that made back all of the losses plus some, all of them. So probably I lost like, it was a break even week. So the first day of the week I went aggressive and I lost like 380, or no, it was a little less than 380. It's a little less than 380. 3 something down. 310. Yeah, like 310, 320, 310. I don't know. Yeah, something like that. I'm trying to remember, but TradeZilla is not doing much to help me in that matter. Anyway, you could see it's not capturing my trades. It's not capturing all of my results, which is annoying me, bro. I promise you, it's annoying me. Because I'm trading the same account. I'm not trading any other accounts. I'm just trading one account. From here and there, I might trade my personal account, but it's usually just one account. But yeah, I lost like 310 or something like that on Monday. And I lost another 190 on Thursday, which was a total for like 500 loss. And then I think I made also like $50 on Tuesday. Right, $50 on Tuesday. And then this trade on Friday made me $500, which put me back at break even. It was a break even week. I gotta be honest. As I said, honesty is the best policy, and me being honest with you guys does not affect me at all. I do not feel hurt. I do not feel embarrassed. I do not feel anything. I'm just content with my own results, because I know for the most part I follow my rules. It's easy to say, you know, I did this, did that in hindsight, but in reality, when I was doing what I was doing, I felt like I was following my rules to the T, right? I didn't over risk. I didn't over trade. I didn't trade in a session that was not my session. I didn't trade before 9:30. You know, I didn't chase trades. I was, for the most part, trading according to the plan. So for me, I'm content with my results, because I know I did everything that I could in that moment to give me the best results that I could without breaking any rules. And that's a what? That's a W. It's a W. When you follow your rules, it's a W. Even no matter the results, win or lose, you follow your rules, It's a W. Anyway, last day of the week, Friday. Woo, 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 woo. So on the 15-minute time frame, didn't see no area of the area of interest. Let's just get to the one. Let's get to the 1 minute. Yeah, I know you guys want to know how I made money. I did make a breakdown video about that anyway. So you guys watched it already before you even get to see this video. But I mean, automatic off rip. When price dropped below this area of interest, oh well, I just showed you guys the whole thing. But it's just because the bar replay tool just shows the whole thing. Once price got underneath this 1 hour area of interest, I can see to the left. What happened to the left? What happens at highs? There's a lot of liquidity at highs. Price, people put their stop losses above highs, especially when price went back down. That's where people have their stop losses. Or if they're looking for a breakout, this is where people have their buy stops to get a breakout to go up top. So there's a lot of liquidity up here. So price came and did what? Ran all that liquidity to the left. All this to the left. All this to the left. Ran all this to the left. So once price ran that, I'm like, oh, and it's turning around. You can see on the 1 minute time frame, just look like this. I'm like, we looking for sales today. 100%. I was pretty confident in sales, just like I'm pretty confident almost every other day. So what was I looking for? Looking for a trade that looks like this. Boom. Tap me in. I'm not gonna lie, I was risking a bag on this. I'm not gonna lie. Let me see how much I was risking. 56 points, like 55 points really. 55 points on this trade. So TP2 is all I was going for. Anything below 30 points, 29 and under, I'll go for TP3. But I was risking 55 points on this trade. So I'm waiting for 110 points to get my TP to hit. But guess what? TP was hit. So price dropped. What am I waiting for when price drops? What am I waiting for? Price to come back, retest that area of interest, boom, drop. That's all I'm waiting for. Nothing too crazy. Nothing too crazy. Price did what? Tap me in, and then did what? Take profit hit. I did think I was gonna get stopped out. I'm not gonna lie to you. As I see price just inching back up into that area of interest, I thought I was gonna get stopped out, but I didn't fret. Didn't, you know, because it wasn't creating structure back into my area. It just pulled back. So I got tapped in at 9:32, and by 9:46, which is 12 minutes later, I got tapped in. I got TP1, and then TP2. I got TP2 at 10:01. So altogether, it took a little bit under 30 minutes to get me to TP2, which I was content with because it made me back all the money I lost of the week, which ended me back in a break-even week. As I said, totally fine. I followed all of my rules. I've stayed disciplined. I followed the plan. Didn't over risk. Didn't over leverage. Didn't overtrade. Didn't trade the time zone that wasn't my time zone, or didn't trade before 9:30. I can keep going. I was disciplined for the most part, and I executed according to the plan for the most part. So happy with my results for the week. You know, that's my video though. I love you guys, man. Thank you guys for tapping in. I try to give you guys as much sauce as I can. I try to be transparent and honest in all of my videos to show you guys that I'm not perfect, but I do try to follow the plan as much as I can, and I journal it too. So when I'm doing my backtesting sessions, I get to go back and I get to see the exact trades that I took. So you guys get to see it too. This is the exact trade I took. This is the exact trade that's on the screen right over here. Same trade. The same exact trade. See, same exact trade. So it just shows me that what I'm doing in the backtesting sessions when the markets is not live and the markets is not affecting my emotions because I have no money at risk. The things that I do basically offline is the same thing I do online when the markets is on and I have money at risk, and things can affect the way things end, like the results of the day. I still do the same thing. So that just shows me the growth, the consistency, and the way that I execute my trades. And I'm just happy overall with how I'm going about, you know, the cycles. A break-even week is still a W week, especially if you followed all your rules. So That's my video, yo. Love y'all. Till next time. Peace.